Good morning, everybody. Good morning. Okay, let's see here. Just want to make sure I can see you guys' questions, or sorry, comments and questions. Cool. All right. I think we're good here. All right, let's get started. Good morning and happy Wednesday. It's hump day, and we've got, where's my camera? I think this one here. Yeah, okay. Thanks for the shirt, appreciate it. I'm Florida vibing, so it's par for the course. All right, let's get started. So this is our morning call. If you're here for the first time, thanks for being here. Set the market. We're going to spend the next 10 to 15 minutes going through some of the things on our, here's the camera, notepad. If you're here for the first time, I always like to remind people, please make sure you subscribe to the channel. Obviously, it's free, but if you subscribe to it, you will get updated in real time when we go live, when we have new podcasts and analysis and all sorts of stuff. So please do that, and please spread the word. Also, anytime you watch a video, if you can give us a thumbs up like or leave a comment or actually both would be awesome. That helps the algorithm. So anyway, thanks for being here. So what are we going to talk about? Well, we have to obviously look at some of the news this morning that's moving markets. We had producer price index that came in a bit lower, and so what's happening is equities celebrate that because it basically gives the Fed a bit more room to cut rates. Equities celebrate most things in when you're at these sort of gambling presentations, gambling levels. Yeah, that's what we're kind of experiencing here right now. Also, we are going to have to talk about Oracle quickly. That's something else that's kind of pushing things higher. For those of you that are in trade ops, and we'll see if we have time to also do it in the trade-a-thon this morning when we go through our morning process live. We are going to see if we can potentially do a gap trade this morning. The Nasdaq is obviously going to open up higher this morning. Let me see if I can give you the pre-market action here. It doesn't matter. Anyway, the Nasdaq's going to open up higher this morning, and so we might be able to get a gap fill trade off. So we'll see if that's possible. But let's kind of just once again remind ourselves, which I like to do every morning, as you guys know here, where the performance still is, even though we now have a new contender on a single stock basis, Oracle, and we'll look at the Oracle chart here in just a minute as well. But I just want to, once again, and you guys, I do this every morning, I remind you where the performance is in terms of year-to-date assets. And it's not in Mag 7 stocks, right? It still is in hard assets, be that gold miners or uranium and gold and silver, copper miners, European stocks, Asian stocks, Bitcoin. It's pretty much anywhere but there. So, when you have a news like yesterday with Oracle, that once again masks what's going on. But there's a big sort of facade here that I think people are unwilling to look behind. To maybe give you a bit of perspective on that, let's just look at two stocks that are very large stocks. We'll look at Google and we'll look at Oracle this morning. I just want to show you where these stocks are currently trading. Just forget valuations. Just from price action perspective, I think that should go a long way in kind of giving you some perspective. So I'm going to make this, first let's start off with Google. And let me just get rid of these moving averages because they're really not pertinent to the analysis. So here is the chart of Google, and we should probably make this a logarithmic chart. Yeah, it is already. Okay, so here is the chart of Google, and we can make it a really, really long-term chart, in which case we would probably come to. So I'm gonna make this. Let's make it two time frames. Make it a time frame back to 2007. Okay, so that's this line. So we're getting very close to the very, very upper end of a long-term trend, and we can do this. So this is just a broad. It's not perfect, but you can see so that's quite overbought, right? We're getting to the very upper end of the range. That's a very long trend. This one goes back to 2007. So that's almost a 20-year trend, or 2006, whatever. If we go a bit more reasonable in terms of the time frame, we'll go back to maybe the last couple of years, right? I'm just trying to explain to people where these stocks are now getting to. It doesn't mean that they're shorts. I wouldn't be shorting these stocks. But I think it's just important to be cognizant of where the stocks are getting to. We can draw all sorts of trend lines, right? So this is not really all that hard to do. And trend lines are a dime a dozen, so sometimes they matter, sometimes they don't. This is another one we can draw just by drawing a couple of parallels. Again, we're trying to connect as many dots as possible, right? It's not a perfect science, but I think it gives people a bit of an idea of kind of where we're at. So you could call it a breakout. I will also say that we're going steeper and steeper. Now, with Oracle this morning, and I will show you in a minute that our Vertical X Pro has a severe overbought signal in Google, and it's probably going to give us one this morning in Oracle too. So Oracle this morning, I'm just looking pre-market now. Oracle this morning, obviously it's up 20 whatever plus percent this morning. It's currently trading around 320 pre-market. So that's 320 is up here. Okay. Now let's do the same exercise on Oracle and see where that stock now is. If we can draw some sort of lines here that would even make sense. The stock is going more and more vertical, right? Now, again, this is not to say it's about company. Clearly, they had some amazing news to say yesterday, but the stock is literally now kind of doing one of these here. And so you just have to ask yourself, is this really where one wants to buy the stock, right? Or is this potentially I saw someone earlier yesterday or something call it a potential jump the shark moment, right? So this is the kind of the range that I see on Oracle for the past number of years, past 6 whatever plus years, and we're now basically going to open up here this morning. Again, this is not to be bearish, it's just to give you just very objectively what the lines are. The lines draw themselves. I'm not suggesting this is a short. I wouldn't be shorting the stock, but I'd be cautious about potentially buying in here. I think that's the bigger sort of thing that I would be concerned about. So if you guys have any questions, by the way, on this, let me know. But if I make this now a 2-panel chart, right? So let's get fancy. Let's do Oracle there, and let's add Google maybe over here. Then we're basically getting to a situation. Again, these are multi-week, multi-year, multi-year, weekly charts, meaning like, long-term stuff. So it's just questionable whether it's worth buying stocks when they've had these kind of big runs. That's really the only thing I want to just kind of say on that. And even so, right, even with these big moves, Mag 7 as a theme is not actually leading the charging anymore this year, because the rotation has been and continues to be out of the theme, right? That does not mean that algos aren't going to be buying Oracle here, or some funds don't have to buy Oracle, but it's just at the margin, the AI trade, there's very little money left to be allocated to the AI trade by large portfolios, managers, and institutions, right? The retail community doesn't have enough money to allocate, to move the needle, but it's the passive investing that bubble, I'm going to call it that adds basically more and more money to the indices, which means more and more money gets added to just a few stocks because they happen to be the largest contributors or market caps in the index. So it's quite a vicious sort of spiral, and ultimately this is going to be a big problem. I keep saying it again. This does not mean that one has to short everything and jump out the window. It just the risk builds more and more and more until ultimately it just tips over, and that's what I would like to share. But again, what the year-to-date performance of things show us is that the ship has already sailed in terms of where the next moves are going. Look at this chart, right? All the hard assets, gold miners, uranium, copper miners, all that stuff. I think copper's going to go next as well. If you're a heat seeker member, by the way, we'll do a special member session today at 3 p.m. Eastern, noon Pacific. We'll update you guys on a couple more things that are taking place there. But again, this is something that I keep repeating it every day morning, and I bet it's getting a bit annoying to some of you. But I see that still very few people are willing to acknowledge this, and almost no one is really actually allocating to this, right? If you think about it. So anyway, that's that. I want to do two more things, and that is show you gold quickly, because we get a lot of questions on that. We showed it yesterday, and gold actually in the near term now is once again very overbought by our vertical X Pro indicator. That does not mean that I need to go out there and short gold or dislike it. It just means that it's likely, according to our vertical X Pro indicator, short-term overbought. So if I'm long gold, I would want to maybe sell some calls against it, or if I want to be aggressive and I maybe sell some futures against it. If I'm long gold, I personally, for me, and you guys know this, I mentioned this in late May or early June. I can't remember the exact week. I reduced my long gold exposure by 2/3 back in late May or June, or wherever it was. And so I did not participate on this latest, 5% higher in gold. Well, I did, but just only with 1/3. I'm going to look to get involved again and go to a full gold position with my personal money, just me, once I see this no longer be as overbought as it is right now in the short term. So that's just me. I remain long silver futures, so it's not like I'm not exposed to this trade. I'm probably equally exposed from a leverage perspective to the long gold and silver trade. It's just that I reduced my gold position. Again, this is nothing new. I talked about it here late May, early June, whatever it was. Just thought I'd give you guys an update on that. Are there any questions that I can address here before we wrap up today? We'll be back, of course, tomorrow morning. Yesterday was a busy day. We had a great fun with people, with so much education yesterday going through the market. I probably saw more people yesterday have an aha moment in terms of using a process to the market as opposed to just randomly picking stuff from random indicators. Probably saw more light bulbs go off yesterday than I have ever in one single day. So we're going to continue that today in our trade-a-thon, in trade-ups, and throughout other member sessions we do throughout the week and day. So if there's no other questions, we'll leave it at this. We'll see you guys that are trade-a-thon members in about half an hour, where we can go through our morning process all September long. If you are a trade-ups member, we'll be in there. We'll see if we can do a gap trade this morning. And certainly we'll be back here tomorrow morning on Thursday. Tomorrow morning, by the way, Thursday is going to be Ticker Thursdays, and we always do Ticker Thursdays on Thursdays. So we'll look for that. In terms of just quickly, maybe to kind of put a bow around it, I just, basically I think just be careful getting too bullish on Google and Oracle up here. They've had big runs. They're great companies. It's just probably not the time to buy it. Right, so that's more my message here, more than anything. By the way, I should mention, I say all these things here about things getting overbought, maybe, in the bigger picture. But I should mention, for example, we had a beautiful trade with our market rover in Micron Technology, which just is now reaching its profit targets. If this comes up here, you'll see it here in a second, where it's reached the profit targets, and there. So you can see the trade here that just reached. This is for Market Rover members. We sent that out by email and shared it to you in real time. So that profit target is now getting reached up there, the second one as well. So anyway, again, hopefully this is helpful. Please give us a thumbs up, like. Please subscribe to the channel. It's all free. And we'll see you guys again soon. Back here tomorrow morning. Take care.